Hey American Pacific Mortgage family, Kurt Reisig here, your chairman at American Pacific Mortgage, or perhaps better known to some of you as the Lone Warrior. That's right, the Lone Warrior, which I relaunched just a couple of weeks ago. The Lone Warrior is a forum I started during the mortgage meltdown more than 10 years ago to communicate with folks about what I see in the industry, making observations, sharing some information, maybe some occasional inspiration. And I see this market as very similar to the market in 2006 and 2007. It's a battle out there for many folks out there, and I see this, and this is why we've brought back the Lone Warrior. You know, at DC, I shared a couple of things that I'm seeing in the marketplace. One of them has to do with industry consolidation. I believe that 1 in 4 or 5 originators and mortgage companies aren't going to make it through this winter that we're entering into right now. It's because the market has become too congested, there's too many players, and they just aren't going to make it. And that's going to create a tremendous amount of opportunity for us to go out and take market share, whether it's a company like ourselves, your branch, or you as loan officers. As others exit the business, that leaves share for you to go out and take. Huge opportunity. The other thing going on in the industry right now is the change in the real estate market. What we see across markets all over the country is inventories are finally rising again. Seattle, more inventory. Denver, more inventory. The Bay Area, Sacramento, California, right here where I am today, inventories are coming up. And it's changing the dynamics of the marketplace. Real estate agents are freaking out. They're not used to putting a house on a market and seeing it sit for 30, 40 days before it gets an offer. But really, that's normal. That's the way a real estate market is supposed to be, where buyers and sellers have more balance in their negotiating power. And it's a great thing for the real estate market. But real estate agents, they haven't seen this. Many have never seen it in their entire careers. Our opportunity as loan officers and as a company is to go out and remind them this is a good thing and help them shift their business from maybe a pure seller-based business to a buyer and seller-based business and bring them tools and resources to help them adjust to this market. So a lot of great things and great opportunities going on through these shifts. And now is a perfect time to double your efforts and get out there. Like I said, many aren't going to be able to step up. I had an example I saw just recently. A loan officer we knew, been with us for a long time, left and took a job at a credit union to get a nice, stable salary. He just hadn't made the adjustments with social media and lead generation and other things to adapt to this market, so he left the business. That's just representative of what we're going to see out there. And good riddance, it leaves more market share for the rest of us. Last time I talked to staff about how important it is to support your loan officers and to be scrappy. Get behind the cost savings every branch and every part of the organization need to affect to make it through this winter. And for you loan officers, I got a message for you guys too. Again, as I said, this is the time to double your efforts. And that means making investments in your business that maybe you haven't thought about making before. You know, loan officer compensation constitutes between 40 and 60% of the gross revenue brought into the company. If you want to make additional investments, if you want to go out there and do sponsorships or maybe invest in lead generation, you can do that. And a way to do it is simply go to your branch manager and negotiate with them to take some of your compensation and direct that money to those investments that you want to make. A good example would be lead generation. If you spend $1,000 a month on lead generation with AP Connect, that's going to generate about 12 good leads for you. They're going to distill down to 3 you can hand to a real estate agent. How good is that going to be to hand a lead to a real estate agent? And you can count on 1 or 2 of these deals closing. So think about it. $1,000 investment, 1 to 2 deals closing. The math works. But what has to happen is you need to make that investment. You need to take control and recognize that your comp is your tool to invest in your business. That's how you're going to navigate. That's how you're going to go out and take market share in these transitional times we see out there in the industry. You know, you as a loan officer have to decide whether you're going to be a victim or a victor. And as the lone warrior, I believe that victory is the only option in this marketplace. So folks, take action. Get out there, make the adaptations you need to make, and invest in yourself. Until next time, this has been another message from your lone warrior. Until then, battle on.